Russia's oil crash is becoming the defining moment of this war. A pipeline near Omsk erupted with a 40-meter, 130-foot fire column on a map that looks like a minor industrial accident somewhere deep in Siberia. But the explosion, that is not the main story. That is just a setback. What happened, however, on the oil markets during the same week is a colossal disaster for the Kremlin. A fireball might be frightening, but a broken market that threatens the entire Russian war machine. Russia could put out flames, but it cannot put out a financial crisis in its energy sector. Moscow spent many years claiming that its energy empire was untouchable. Yet, in the very week a pipeline turned into a torch, the price of Russian oil fell into crisis territory. The fireball was the alarm, but the oil price, that crash, that is real damage. When an energy state loses profit, it loses the ability to wage a long war. The explosion was the warning. The loss of oil money is the real strike against the Kremlin. My name is Jason Smart. I'm a special correspondent for the Kiev Post and a national security advisor. What we are about to discuss is actually one of the most interesting things that has happened in the past 3.5 years. This is quite literally a game changer in this war. Russia, as you know, is heavily dependent on oil. Without oil, without gas, what does Russia have to offer this world? But today, the cost of Russian oil has just collapsed. So let's take a look at this. Let's take a look at what's really going on and why the situation is so very dire for Russia. Now, of course, as we would expect, the Western press will almost never pick this up. So help us get this truth to more people of what's happening here in Ukraine and what's really happening in Russia, the country that is losing a war to Ukraine. Your means that you could help me is very simple. Please like this video, subscribe to this channel, and consider becoming a channel member today. Your support for this channel and for Ukraine is greatly appreciated. And as always, you can check out the first comment to see how you too can help Ukrainian soldiers get life-saving drones. So let's dig into it, and you'll see for yourself why, adjusted for inflation and pressure, Moscow today is being hit harder than the USSR ever was. Because this time around, the collapse is coming with isolation, shrinking allies, and a war machine that is burning money faster than the state can earn it. So let's take a look at this specifically. What is happening? So in the past few hours, you might have heard that Urals crude is trading close to $36 per barrel. The Kremlin, however, built its war budget assuming that Urals would be closer to $59 per barrel. That gap wipes out roughly 33% of the oil revenue that Moscow had expected. That profit was supposed to finance the artillery shells, the drones, the missiles, but all of that is no longer affordable. A petrostate in a high-intensity war, it can't survive for very long on bargain bin revenue. Sanctions now are targeting the net income instead of the net volume that comes from Russia. Shipping companies, insurers, traders, they all risk penalties for doing business with Russia. And that's why today they're demanding heavy risk premiums on every voyage. Each extra dollar in transport, it cuts into Russia's profit margin. The same volume of exports now buys far fewer shells, far fewer drones, and far fewer missiles than before. What we are seeing is this, that what we are seeing, quite literally, quite seriously, might be the beginning of the end of the Putin regime. Consider this. Russia sells about 80 to 85% of its oil to India and China. As you know, the Russian national budget is about 40 to 45% from oil and gas. But today, India and China, those who buy the overwhelming majority of Russia's oil, they're starting to step back. Right when Moscow most needs them, they're turning away. Major Indian refiners have paused direct purchases from Neft and from Lukoil. Chinese state firms have slowed or frozen many direct contracts with Russian oil companies. These buyers fear Western secondary sanctions. They fear the United States. They might like Russian cheap crude, but it's not worth the change that it brings with it. It's not worth the uncertainty or the possibility that the Americans will hunt them down. Export arteries that once pumped cash are today becoming clogged. Roughly 1.4 million barrels per day of Russian crude is sitting in floating storage. Barrels that once generated instant cash now generate daily storage bills. Today, oil is costing the Russian government more than it's making it. Tankers can circle for days because the ports refuse to accept them. Insurers are hesitant to provide them coverage. In reality, an oil state with stranded oil is a casino with no cash in the vault. An oil state with no cash flow cannot fund a modern industrial war. Today, the shadow fleet that once saved the Kremlin is turning into a liability. Russia assembled a ghost fleet of old tankers to dodge sanctions, to carry its banned cargo. But we've just seen the past few hours, the past couple of days, Canada, for instance, has blacklisted tens of dozens of Russian ships. Sanctioned vessels struggle to dock. They struggle to refuel, to obtain valid insurance anywhere. Each blacklisted hull turns from a strategic asset into a floating risk for the Kremlin. As his fleet is hunted globally, Moscow's main bypass around the sanctions is collapsing at sea. Inside the federal budget, the damage is even worse. Take a look at what we see happening right now in the Kremlin. War spending is rising, while oil incomes, they are falling sharply. So the Kremlin's financial assumptions have collided with the harsh reality that they cannot afford this. Lower prices, fewer buyers, and higher shipping costs are hitting all at the exact same time. The gap between official promises and actual revenues, it gets wider every single month that the prices stay low. That gap cannot be filled with empty slogans, television shows, nor parades. These empty words, they don't matter. Today, Russia is running very quickly out of money. So let's take a look at the oil companies. What are their numbers today? What are the Russian oil companies saying that their profit is given the current situation? Well, major Russian oil firms report profit drops between 30 and 65% year on year. Gazprom Neft's profit, it fell by around 65%, while revenues, they fell by about 18% for the same period. Neft, Lukoil, and others, they are showing the same patterns. They're falling profits, but increasing production cost. A real wartime boom, it fattens its energy sector. This one is thinning it out. The numbers expose a mobilized economy that is weaker than the Kremlin can admit. And we know that for a number of reasons. For instance, the finance ministry, it has begun to hide more of its financial data. The last full summary of the federal budget execution was published with data only through August. After that, aggregate numbers simply stopped appearing. Regimes only hide financial data when the data is going to be bad, when it's going to be politically dangerous to show, because the spreadsheet is already telling Moscow what the generals will soon confirm. The money for this war is running out. If the books were strong, the figures would be plastered around everywhere on the internet. They would be very proud of it. They would show everybody that Russia is beating the sanctions. However, today, they don't think that they're beating the sanctions. But there's something else as well. Under the oil sector, the broader industrial base is quietly cracking. Strategic materials needed for weapons and electronics, they are becoming lost. Russia's largest refined silicon producer, the plant in Irkutsk, it plans to come to a halt in 2026. Around 34,000 metric tons, about 37,000 short tons of annual capacity will be mothballed. Silicon is critical for chips, sensors, guidance systems. It's what Russia needs today for its communications, but today, it cannot afford it. Its major factory is about to shutter its doors. Businesses are dying across Russia faster than the new ones appear. Official data shows that businesses today are dying about 1.5 times higher than new businesses are born. The total number of registered companies right now in Russia has fallen to the lowest level since 2010. To survive, many firms have shortened the work week. They've cut hours, and they're not hiring more staff. A shrinking business base, how will Russia afford this war? It can't pay for it from the oil, but even the Russian companies today, they can't afford to pay for it either. So where would they get the money? Well, maybe they hope there will be more Russian children and young people that enter the marketplace. They'll take up jobs. But that's probably very unlikely. Because the demographic situation, what we see in the regions, it is sabotaging the war machine. Officials admit that around 80% of Russian cities are losing population. Research points to nearly 130 small towns drifting towards effective extinction. In total, around 3.4 million people from these towns are at risk of disappearing from the economic map. These are the places that once had factories. They once had refineries. They once had army units. But today, they're becoming desolate. But abroad, the Kremlin's energy empire is being dismantled. piece by piece. The Burgas refinery in Bulgaria shows how Russian soft power is beginning to collapse. For decades, Lukoil's Burgas plant, it processed about 140,000 barrels per day for the Balkans. It gave Moscow leverage deep inside the European Union and even inside of a NATO country. But after the United States began its sanctions on Lukoil, even neutral traders refused to act as Russian fronts. Bulgarian lawmakers moved to take control of the Burgas plant under national authority and push Moscow out. Now we see that they are going to be forced out of the market. But there's something else happening as well, and this is important. Russian firms are retreating globally because they have no real choice. Under sanctions, Lukoil and others are selling off refineries. They're selling off their fuel stations. They're selling off their entire network abroad. Assets that once gave the Kremlin leverage over to their foreign politics are today looking like toxic liabilities. Western companies and regional players are circling in to buy up these Russian goods. But today, the Kremlin is desperate for cash, so it has to accept. But as revenues begin to weaken, the Kremlin is turning inward. It's going to have to rule more by fear, because historically Russia, whenever there's a serious problem, whenever it looks like the situation is really bad, they always turn back to that. They have no other way to control their population except through fear. Today, everyday Russians are being quietly robbed at the supermarkets. They feel that their money is losing value. Consumer groups estimate that shrinkflation now costs over $11 billion per year. Packages get smaller while the prices and the fake discounts try to hide the real cost per kilogram, the real cost per liter. Inflation is hiding what is actually occurring. What we are seeing is that Russians today, they claim they make more money, but they can afford less. Why is that? For a very simple reason. Their money has less value. The Russian government has been printing tons of money. And as you could probably imagine, there's not a lot of countries dying to buy Russian rubles. So what can they do with it? Well, they can't do much, but they can pay for domestic cost. But that only makes the inflation worse. But what we see is even more incredible. As this is going on, as there is a war in the markets about oil, where we see the Gulf states trying to sell more oil, increasing production, cutting into Russia's profit, there's something else happening. Ukraine is striking the points that the Russian economy cannot protect. Ukrainian drones have hit refineries thousands of kilometers, thousands of miles inside of Russia. Partisan groups at the same time are striking the railroads. They are sabotaging the key depots. All of this is bringing the trains of Russia to its standstill. Ukrainian artillery then is used to attack more of Russia's ability to make money. What we're seeing today is that Russia's ability to wage war is simply and brutally being cut short. Russia is not running out of oil. Russia, though, is running out of profitable oil. And a state that cannot have access to its pipelines, that cannot use its own ports due to Ukrainian attacks, a state that has oil that's worth less than what it costs to produce, how can it continue fighting a war? How can a war machine without revenue continue down its strategy? In fact, it is metal waiting for rust. Today, Russia could still fire shells, but it is burning through the savings and assets that it might need tomorrow. The longer this price shock lasts, the more permanent the damage to Russia's war capacity becomes. Today, Moscow is afraid of what's going to happen. They know that this is bad. One explosion in Omsk looks like a small local event on Russian television, but one steep discount at Novorossiysk, it looks like routine prices are becoming impossible to maintain. Together, they will reveal a petrostate that's losing the financial oxygen required to wage war on Ukraine or to threaten the West. Russia is not collapsing in a single dramatic moment. It is being drained by numbers on its own balance sheets. This spreadsheet is already doing what sanctions and drones were meant to do. It is cutting into the heart of the Russian war machine. Oil was supposed to guarantee this war forever. Now it is quietly sawing through the legs of the Kremlin's throne. The oil shock is not background noise. It is becoming the defining moment of this conflict. And today, the Putin regime is closer to its defeat than it has ever been before. Thank you for watching. Please like this video, subscribe to this channel, and consider becoming a channel member today. Please do leave your comments below. Love to read them and to hear where you're from. As always, thank you for supporting Ukraine.